Need cash for a car, college, or maybe your own business? I'm sure you've thought about getting a loan at some point, but what exactly is a loan? How do these things work, and most importantly, how do you steer clear of the usual traps? Today, I'm breaking it all down for you. By the end of this video, you'll know the basics about loans, what types are out there, how interest rates work, what repayment really means, and how to make smart borrowing decisions. So, let's start with the basics. A loan is pretty much just money you borrow from someone, a bank, a credit union, an online lender, or even your friend, and you promise to pay it back. But of course, nothing comes for free. When you take a loan, you agree to pay back the principal, that's the original amount you borrowed, plus interest. Think of interest as the lender's fee for letting you use their money. Sometimes there are extra fees too, so always check the details. Now, there are different types of loans, each made for specific situations. First, there's the personal loan. This is unsecured, which means you don't have to put up anything as collateral. You can use it for almost anything: medical emergencies, home repairs, even a wedding. Usually the interest rate and the repayment period are fixed. Next, auto loans. These are for buying a car. Here, the vehicle itself acts as collateral. If you miss payments, the lender can actually take your car back, so be careful with this one. Then, student loans. These help you pay for college or some kind of skill program. Student loans can be from the government or a private bank. Good news is, they often have lower interest rates and you usually start paying them back only after you finish your studies. Of course, there are home loans or mortgages. These are big long-term loans for buying a house. Your home is collateral here. So if you miss too many payments, the bank can take your house. And finally, business loans. If you want to start a business or expand an existing one, you can get a business loan. Depending on your business and credit profile, these can be secured or unsecured. Okay, but how does interest work? This is super important. The interest rate decides how much you end up paying back in total. Some loans have fixed rates, so the rate never changes. Others have variable rates, which can go up or down. Whenever you look at a loan, always check the APR. That's the annual percentage rate. It's basically the real cost of your loan because it includes interest plus any extra fees. For example, if you take a RR's 10,000 loan at 6% APR, you'll pay a lot less over time than if your APR is 15%. So, no matter what you need the money for, make sure you understand the loan terms, compare interest rates, and only borrow what you can actually afford to pay back. Read the fine print, and don't be afraid to ask questions. Smart borrowing today means fewer headaches tomorrow.